What's going on, guys? Adam here, back with you from the EZFX office. Today got another trading tip video for you. Today's one is going to be revolving around support and resistance levels in the Forex market. Now these are two very important tools. They give you a very kind of near accurate indication of where the market's going to be moving, whether it's going to be going up or down. Just to give you a brief overview of them. The support level is where buyers are stronger in that particular market and they drive the price up by constantly buying. It's basic supply and demand logic. You know, more buyers, the more expensive something becomes. The resistance level will be the opposite, so there's a higher percentage of sellers in that particular market and it's going to drive the price down. Now these two levels, we can use them as values in the market and as a way to predict where the price is going to change, whether it obeys them lines or not. I'm going to show you how to plot them today, kind of what they represent and how you can use them for your trades in the future. So if we move over to the screens now, we've got GBP JPY chart here. I've already got these lines drawn in, so I'm going to change to a different chart instead. If we just go GBP CAD, for example. So the pound against Canadian dollar. I'm going to remove drawings. Okay, so the same as my trend line video, the first thing you want to do is change to a line chart. That's going to make plotting points much easier and clearer, and then you can change back to your candlestick chart after. So support and resistance is going to be the turning points in the graph. So if we look here, these pivot points are resistance levels. Every time it hits this pivot point, the price shoots down. Here again, shoots down, here shoots down. So if I draw these in, if you go to the horizontal line tool, if I plot point 1 up here, that is actually a resistance line. You know, it hits that point and then the price shoots down. So what it indicates to us here is at the top, there's actually more sellers that are in favor of this particular currency pair and they are driving the price down. If I change the candles, you'll see bang on the line. And you can see the change in the price action up there. For support, it's exactly the same, but you're looking for the trough pivot points instead. So if we take this one down here, for example, this particular point here, we can see it's in a downtrend. The price shoots up in the opposite direction and pivots, and that's because in this area or this particular price region, there's a higher percentage of buyers that are driving that price up. If we change back to the candles again, you'll see it accurately represents on the chart. And these lines are very important because it lets you see where the price is going to change and if it's going to change. Just one thing to be careful of, some currency pairs are more volatile than others, so they may not obey these lines, and that is where you get breakouts similar to what's gone on in this region over here. But that is the basics of support and resistance lines, guys. The only other thing I would say is the time chart you're using is going to represent the kind of impact that particular level has on the currency. So a 1 hour resistance line is going to drive the price down perhaps maybe 40-50 pips, whereas a 4 hour or a daily resistance line, you're looking more into the 100 range of pips. So just bear that in mind when you're plotting your lines, and have a go at it, guys. Make sure to change to the line graph like I said earlier and see what results you can come up with.